Welcome. What is the general overview of the concepts and practices associated with trading in financial markets?
Trading in financial markets involves buying and selling securities in order to make a profit. Some common securities traded in financial markets include stocks, bonds, currencies, and commodities. Traders can use various strategies to make trades, such as technical analysis, which involves using charts and patterns to predict future price movements, or fundamental analysis, which involves evaluating a company's financial and economic data to determine its value. Traders may also use financial instruments such as options and futures to speculate on the future price movements of securities. Traders can participate in different markets such as stock market, bond market, currency market, commodity market, options, and futures market. They can be a retail trader, an institutional trader, or a professional trader. They use different platforms such as stock exchanges, OTC market, and electronic trading platforms to execute their trades. Common securities traded in financial markets include stocks, bonds, currencies, and commodities. Stocks. A stock represents a share in the ownership of a company and constitutes a claim on part of the company's assets and earnings. Stock trading is the most common form of financial market trading. Investors can purchase stocks through stock exchanges such as the New York Stock Exchange, NYSE, or the NASDAQ, and they can also buy and sell stocks through over-the-counter, OTC, markets. Bonds. A bond is a debt security that pays a fixed or variable interest to the bondholder and returns the principal when the bond matures. They are issued by governments and companies to raise capital. Bond trading can be done through the bond market, which is a segment of the financial market where debt securities are traded. Currencies. Foreign exchange trading, also known as forex trading, involves buying and selling currencies in order to make a profit. The value of a currency is determined by factors such as interest rates, economic growth, and political stability. Forex trading can be done through currency markets, which are decentralized markets where currencies are traded. Commodities. Commodities trading involves buying and selling raw materials, such as metals, agricultural products, and energy. The value of commodities is determined by factors such as supply and demand, weather conditions, and political stability. Commodities trading can be done through commodity markets, which are markets where raw materials are traded. In addition to these common securities, there are also other types of securities that can be traded in financial markets, such as real estate investment trusts, REITs, and exchange-traded funds, ETFs. It's important to note that the securities in these markets have different characteristics and are affected by different factors, so they may have different risks and returns. Therefore, traders should have a good understanding of the market they are trading in and the securities they are trading before making any trades.
Traders can use a variety of different strategies to make trades in financial markets. Some common strategies include technical analysis. Technical traders use charts and technical indicators to identify patterns and trends in historical price data, which they then use to predict future price movements. They look at patterns like head and shoulders, support and resistance, trend lines, and many other technical indicators. Fundamental analysis. Fundamental traders use financial and economic data, such as a company's financial statements and news about the overall economy, to evaluate the underlying value of a security. They focus on indicators such as revenue, earnings, and growth potential to make trading decisions. Trend following. Trend following traders look for securities that are trending in a certain direction and then try to profit by riding that trend. They use trend indicators such as moving averages to identify trends and make trades. Mean reversion. Mean reversion traders believe that prices tend to move back toward their historical average over time. They look for securities that have deviated significantly from their historical average and then try to profit by buying when prices are low and selling when they are high. Arbitrage. Arbitrage traders look for opportunities to profit from price discrepancies between different markets or securities. They try to buy a security in one market at a lower price and then sell it in another market at a higher price, earning a profit from the difference. Algorithmic trading. Algorithmic traders use computer programs to make trades based on mathematical models and algorithms. They use historical data to find patterns and make predictions about future price movements. These are just a few examples of the many strategies that traders can use to make trades in financial markets. The strategy that a trader chooses will depend on their individual goals, risk tolerance, and market conditions. Tell me more about financial instruments. Financial instruments are a way for traders and investors to gain exposure to a particular asset or market, or to manage risk. Some common types of financial instruments include options. An option is a contract that gives the buyer the right, but not the obligation, to buy or sell an underlying asset at a specified price at a specified time. Options can be used for speculation or for hedging purposes, to protect against potential losses in other investments. Futures. A future is a contract to buy or sell an underlying asset at a specified price at a specified time in the future. Futures are most commonly used in commodity markets, but they can also be used to trade other assets, such as currencies and bonds. Swaps. A swap is a contract between two parties to exchange cash flows at a specified time in the future. The most common type of swap is an interest rate swap, in which two parties agree to exchange fixed and floating interest payments. ET, an exchange-traded fund. ET is a type of investment fund that is traded on stock exchanges, like stocks. ETF allow investors to gain exposure to a basket of securities, such as stocks or bonds, in a single trade. Derivatives. Derivatives are financial instruments whose value is derived from an underlying asset, such as a stock, commodity, or currency. They are used to speculate on future price movements of the underlying asset or to hedge against potential losses. Warrants. Warrants are financial instruments that gives the holder the right to buy or sell an underlying asset at a specified price and time. They are similar to options, but they are issued by the company instead of being traded in the market. These are just a few examples of the many financial instruments that are available to traders and investors. Each instrument has its own unique characteristics and risks, so it's important to understand how they work before using them in trading or investing. Tell me more about the different trading platforms. There are many different trading platforms available for individuals and institutions to buy and sell securities, including stocks, bonds, and derivatives. Some of the most popular platforms include online brokerages. These platforms, such as TD Ameritrade, E*TRADE, and Charles Schwab, allow individuals to buy and sell securities through a website or mobile app. They often have user-friendly interfaces and a wide range of research and educational resources. Cryptocurrency exchanges. These platforms, such as Binance, Coinbase, and Kraken, allow individuals to buy and sell cryptocurrencies, such as Bitcoin, Ethereum, and Litecoin. Robo-advisors. These platforms, such as Betterment, Wealthfront, and Schwab Intelligent Portfolios, use algorithms to create and manage investment portfolios on behalf of the user. Social trading platforms. These platforms, such as eToro, ZuluTrade, and Iondo, allow users to copy the trades of other successful traders or to share their own trades with others. Algo trading platforms. These platforms are used by professional traders and institutions to execute trades using advanced algorithms and automation. It's worth noting that different platforms may have different fees, features, and regulations. It's important to research and compare different options before choosing a platform. Subscribe, click on the links in the video description to learn more. Follow us under social networks and contact us to learn to trade and get your financial freedom.